And we are back for another episode of the Build Financial podcast. Today's episode, we have Nick Karadza on. If you guys are in the real estate, sphere, you obviously know who Nick is. Nick and his brother own Rockstar Realty, kind of legends in the space. You guys have, guided Canadians on purchasing rentals for longer than we've been in the business. You guys, have a phenomenal get together multiple times a year where you teach people and you guide people not on just real estate but economics as a whole. Really like teaching people how to navigate in today's world. We are incredibly excited to have you on.
Cool. Like I appreciate you saying that, but Legends is far from Legends. We're literally two guys that were like trying to figure out things for ourselves. I almost swore there. Is there swearing here? Or
Yeah, whatever you want, yeah.
But that could be a problem. But anyways, we were trying to figure out things for ourselves, and then we're just like, we just kind of started sharing the lessons with other people as they were trying to figure stuff out, and then it turned into like a community of people all working together. And then we started meeting people like you guys and other people, and we're like, oh, this is kind of cool. There's just like, I guess it felt like maybe because we're in it, it doesn't seem underground anymore. And I think it's kind of expanded over time of the number of people that are looking around being like, something's not quite right here. I should be looking to do something else versus like the traditional path we were all kind of all taught. And it's kind of grown over time. And now we're all like surrounded by like just good people, like you guys yourselves. Like you've met these good connections, you're having these good conversations, and it just kind of changes your outlook and stuff. So yeah, we've just been fortunate to be doing this a long time now. We've learned a bunch of lessons, and we're pretty much an open book. We'll share anything we can.
Well, it's been great ever since COVID came and went. Like to get people back in rooms again, to be able to get into the tables, to sit down, to chat. It's like, COVID brought Zoom, I guess, but I mean, it's good to be back in person. Cause I mean, that's where the energy is. The deals are really made in person. Like everything's got to be in person. It's such a better feel to it.
Yeah, so anything virtual, it's painful. It's like talking to a black hole. Mm-hmm. Like if you're having a one-on-one conversation, that's one thing. But when you're doing a group thing, and like you're like, okay, 50% of the people are listening. Maybe I don't even know they're doing. You can see them doing other stuff, other work on their computer. I'm like, forget this, man. I checked out of that world a long time ago.
Yeah, absolutely. Yeah. We need to be in person. I mean, you guys are like, there isn't really anybody else doing the size of events that you guys are doing. I mean, there was a few like maybe annually that people would do, but you guys hold massive quarterly events, right?
I think so. Now they were quarterly. They were quarterly. We dropped them the frequency down because as they grew, the amount of work involved in them grew as well. And we never anticipated being like an event production company.
Yeah.
So basically, what was happening is it was taking all the cycles of our team to put those on quarterly. So we reduced them now. Now we're down to 2 a year, and that's what we'll stay at 2 a year. So yeah, they're big. There's about we cap out. We don't aim for size. I know this sounds weird. There's about 1,000 people there, so we can't. That's where we want to keep it. We'd like to try to increase quality as we go along. If we can just get higher and higher quality people, and as the people that come time and time again, if they're increasing their level of education, awareness, the things they're doing, then that kind of facilitates the whole event, and it helps the crowd and everything there. But that's where we'd like to keep it. So we kind of just, we tap out at about 1,000 people. And yeah, we do that a couple times a year.
Yeah, they're cool events too, because like you're not just talking about real estate or like plugging like what you guys do. You guys are talking about all different aspects or facets of the economy. You guys are digging into, CPI data, trends, where things are going, currency debasement specifically. You guys have been one of the largest voices, at least in the real estate space, for helping people understand what that looks like, and and advising people that your dollar is being essentially printed into nothing.
Yeah, it's almost a bit of a frustrating thing for me because I feel like it should be taken into account a little more often than it is, and I think a lot of the stuff that is shared online regularly, it's very short term, and it's very micro. Right. So like, so like, if you look at what's happening in the real estate market right now, it's all important stuff. And we're looking at population trends, and we're looking at look at the Toronto condo market, and it's oversupplied and stuff. And that's true. And we know that, right? But if you zoom out, it's like, well, what's really going on here? Like, let's have a conversation about like, are these like the symptoms of something else? And in our opinion, they are. And I think it was when I think most people are now like too young to remember the great financial crisis, right? Or they never kind of lived through it. But in 2008, when that happened, we didn't know what the hell was going on. But we were in the States. We were at a mastermind meeting in the States. And up until then, I guess they had a roaring economy. And the Americans they're a little bit more risk-taking than Canadians, a little bit more brash. We know that, right? But like from the entrepreneur side, they're always up to something. And we were at this mastermind meeting when that all started happening around the October timeframe. And they were like fear in their eyes, like we'd never seen before. We're like, what the hell is going on here? So that's when we started to get serious about trying to understand how the financial system really works, because we didn't understand the contagion, how all that stuff worked. So when we started to understand money a little bit more deeply, we're like, holy shit, we get it. Like now I understand why this is happening. Now I understand more about real estate, because before about real estate, I was just kind of like, well, self-liquidating asset, you buy something, you rent it out, it pays for itself. You know, it kind of goes up in value because I don't know, I guess it does. I don't know how that works, but it does. And then refinance it and you buy another one, or you can renovate it and do stuff. Like that's really kind of all we did. But then when we understood the money behind it at a deeper level, then it opened our eyes to a whole new world. We're like, okay, now we're playing a different game, or we're playing this game for a different reason.
And now you understand like the economics behind, why things do happen, why things are more expensive, why things appreciate in value over time. It's, once, and I'm finding it now, at least with our clients as well, like, younger to mid-aged, males who are looking to invest, they're more educated now on the layer of fundamentals behind how the money moves. If you have people asking about bond markets, you have people asking about policy rate decisions and like how things are going to affect asset values over time. Like we're finding that more people are becoming are wanting to, I guess, absorb more or deeper information as to like why things are happening.
Where do you think they're getting it from? Like, is it social media that they're getting?
Yeah. I mean, we were just talking about this earlier.
Yeah.
Like the pros and cons of social media, but I mean, and especially with like AI coming too, and just the internet in general, like you have so much information at your fingertips, and the amount of learning that you can do so quickly, right? I mean, you can be anywhere in the world as long as you have some sort of signal that you can attach to, right? Like you can learn anything you want at any time, right?
So, yeah, so I agree with you. And this is where it gets interesting to me, because it feels like there's a growing disconnect between, and we can, this is a little bit off topic, so I apologize. No. But it does apply to real estate as well, because it feels like there's a growing disconnect between the older generations, call it whatever you want, right? So I'm 47 now. So I mean, like, if a guy that's 20, he's gonna look at me like, he's an old dude. Like, he's got no hair, and it's all gray on the sides, the bit that he does have. So, and the younger generations, because the older generation is kind of they're still getting their information from like a really kind of finite, places. And these what to them are trustworthy sources that are like, they just cover certain things, and that's all they know. Whereas the new generation is like, yeah, I found this guy on TikTok that explained things to me like this, and this. And they're like, oh man, like I didn't really think of things like that. And the RBC advisor, the old generation kind of uses, and I know I'm kind of like really stereotyping here, but the big bank advisor, whatever, I don't want to pick on RBC, but they would never get that perspective from that RBC advisor that's got that, that chart we've all seen on the wall where it's like, oh, stock markets just go up over time, and it's got all the different stock market indexes going up over time.
Just green arrows up to the right.
Yeah, you know what I mean?
High risk, mid risk, low risk.
Yeah, totally, exactly. Yeah.
And then a happy family in the corner.
Yeah. It's like, this is all you got to do is just buy stocks and everything. Your world's okay. And I'm like, man, there's like a real differentiating factor here. And I'm like, I think I'm not a huge fan of social media, and I took myself off a lot of social media just because I'm like, I found when I got off it, I was like, oh, like, I think the negatives can definitely outweigh the positives, but used in a good way. I'm like, yeah, now that I'm seeing the information sharing and like good source of information go on there as well, I think it's like, it's there's a positive there, and it's interesting to see that you're seeing, I guess, the clientele that you deal with kind of pick up on that and then use that to their advantage.
Well, I think it's also out of necessity. Like, again, you said before, I would just buy a house and then it would go up. And then I would just do renovation and then it would go up and refinance and it was good. Well, up to like 5 years ago, that worked. And now it's like you have absolute chaos in financial markets. You have policy rates going up, going down, inflation going up, going down. You have asset prices increasing and decreasing extremely fast. You have market cycles that are moving like that. To be able to execute at a high level in today's environment, like it's almost out of necessity. You have to start to understand how the money is moving and why things are happening to be able to play the game effectively.
Yeah, and I agree with you. Do you feel like your clients over the last few years, have you sensed that they have a stronger desire for more information about how things work?
Absolutely.
So the crisis, so similar to what happened to us in '08, the crisis now has driven people to be like, what the hell's going on?
Absolutely. Well, I mean, I think it's just like even for the small multifamily stuff, out of necessity, because people can no longer qualify for residential housing, they're getting pushed into that 5, 6, 7 unit like space because you don't personally qualify for the debt. So you have an entire demographic of people who are getting pushed into having to figure it out. And that comes with knowledge about bond yields, about like debt servicing ratios, about, you know, how cap rates work, like all like the fundamental knowledge you need to be able to push into that space. Like that base level is requiring more information to get there. And the guys who are looking to operate at a higher level, they're looking at, you know, policy decisions and where's inflation going to be in the next little while, and then like what's it going to do to our bond yields? When do I buy? How do I buy? You know, like it's almost like they're playing chess now, where you need to strategically look at where's the money printing going to go? How is it going to affect long-term yields? If I buy this, you know, is it going to make sense over time? It's more complicated than just, at least it feels more complicated than it was previously.
Well, and we were seeing it in 21. I mean, like we started, you know, having clients on the res side where we were pushing them to either get into commercial financing or, you know, you hit your portfolio limit or your personal debt limits, and we started using small commercial to make things work. And that was then, and rates were cheaper in 2021 than they are now. So I mean, you know, like that issue is just getting like exacerbated with the way the economy is going. And I think we're at that turning point of that, like, you know, hard times create soft men, you know, all that. I think we're at the point now where hopefully we're starting to try to get back to creating, you know, hard individuals, and individuals are realizing that the government's not here to help you. Your employer is only gonna be able to help you so much. And if you really want to better your life and you're unhappy, that you have to figure out how to do it. And having social media, having the internet is at your hands. And I mean, to your point of getting off social media, it's either going to ruin your life or it's going to make your life a lot better if you use it properly, right? And I mean, there's so much information out there now, and it's so readily accessible that you take a look at where like things are going with AI. It's not so much about it's how to exact or extract information like appropriately now. How to use the right prompts. What exactly to say. Here's your system settings that you can go in and make sure that you're getting the actual details that you want, and none of this fluff, because there's so much in there with ChatGPT. It's how do we refine it now to get exactly what you want and exactly what you're looking for.
Yeah, it's kind of cool because I'm jealous of you guys seeing that with, you know, if you're seeing that with your clients. It's just interesting times. Like when we started, we didn't see that. Well, we didn't have that. We didn't have the same tools. So seeing how quickly technology is progressing in real estate and beyond, and the other tools that allow us to do different things in real estate, it's kind of, it's exciting because it's just like the amount of information you can pull at your fingertips. You can, you know, it's a blessing and a curse, right? I guess, because everyone's got access to it. So you can make the decisions faster, and, you know, and you can also kind of get wiped out easier, because if you're not using the information to make the decisions, you could be making a bad decision. Whereas before, if you kind of had an in, you could kind of, you know, you kind of like protect yourself a little bit. You know what I mean? You're like, hey, no, other people haven't seen this yet, you know, whereas now it's like all the information is at your fingertips, right?
It's also a little bit of like a little like anxiety though too, because like, you know, we're not meant to know everything all the time. You know, it's too much. It's like I don't need to know what's going on in like like on the other side of the world, or some guy like is in an argument, or like, you know, Russian planes invading airspace. Like, you know, when you're working on your own life, it just
the negative stuff can be overwhelming.
Absolutely.
It really can, right? Well, and you were talking in that saying that, you know, like, and I hadn't heard that until I guess when I read The Fourth Turning. Probably is that where I got it from initially, about you know, strong men create good times create weak men create bad times create strong men. I hope you're right. I hope you're right. Yeah. I think we're one stage earlier still, and I still think we have weak men creating bad times. And I think it gets worse from here before it gets better. And I hope I'm wrong. Like, I really do. But I look at right now, like I look at the, like our, you know, and I'll just say it. Like, if I look at our government structure right now and the people we have in power, they're shit. They're doing nothing. There's been no investment, no planning around Canada. There's just been nothing. It's just like they're focused, their priorities are all wrong. There's not, in this country, we should be one of the wealthiest countries in the world. We should support each other. We should support industry across provinces. We could do so much for the people in this country, and yet we're just our priorities feel like, and I mean, maybe I'm wrong, guys, but like from what I see, they just feel like it's virtue signaling to like other parts of the world to try to keep some people happy, whatever. But there's just very little thought for the everyday Canadian saying, hey, let's invest into industry into Canada and do something to make it stronger. Like, look, this whole tariff thing started in February, okay? It started in February. What have we done as a country since February
Nothing,
to try to make...
holiday.
Yeah, we've done nothing.
Zero things.
Like it's almost a flipping year.
But we had time to give Haiti another 60 million to fight crime and.
No, but that's what I mean. This is like we're talking
Yeah.
like insane levels now. But the narrative still is like, well, Trump's bad. It's all Trump's fault. Well, I'm like, no, like it's not. Like, okay, even if he wants to do tariffs, I mean, that's his prerogative. Let him do it. Whether you love the guy or hate him, whatever, that's his thing. But we've put ourselves in such a weak situation economically that we're impacted by these tariffs to this level, and we've yet still to do anything about it. Anyways, that's a whole anti-government rant. We don't have to
Well,
get
if
into that.
anyone's
We
going to
can
make
go
a
back
deal,
to
it's
money.
Trump. Trump loves making deals. We just have no one to make a deal with him. Like, we don't have the right people in office to make that deal.
No, we have a central bank.
Wrote a book about making deals. He loves
Yeah,
like,
but a
the
central-
biggest deal is the best deal. Like, he wants to make them. We can't negotiate. We don't have the strength. We don't have the common sense. Whatever.
Yeah, and if we go back to who's in power now, we'll bring it back to real estate and money in a second.
All good.
But look, we have a central banker in power. Okay, from the research that and I'll say we've done often, right? So for anyone listening, is my brother and I own the business and have got into this together and work with all the investors and have a team and stuff like that. But when I say we, I mean my brother and I. So when we started doing this research, it's like we just kind of realized our opinion is central bankers are probably some of the biggest criminals in the world, right? Because they're controlling this money supply. And as they inflate this money supply, we all get robbed of our time and savings, right? And this is where things get really frustrating. So like if you look at someone that has, because people will say, well, it's only 2%, like it's not a big deal. But when you compound 2%, it matters.
Annually.
Yeah.
Yeah.
And if you look at, and that's what they tell you, it's 2%.
Yeah, right.
Like it's not 2%, right? But if you look at someone that has saved their life savings. So if my father, who worked drywall, putting up drywall, so if he saved $100,000, call it, he's in his 80s now, so let's say he retired. Let's say call it 20 years ago or 25 years ago, right? And he saved $100,000, and that was supposed to be his savings 25 years from now. Well, they've robbed him of an enormous amount of that. And that was his time and energy that he's put into the economy, to the value he provided to people. And in exchange for his time and energy, he extracted value through that monetary instrument, right? That Canadian dollar. And now they've robbed him to do what with it? To do these random projects that no one votes for? You know what I mean? This is where things get frustrating. And then if we go back to the real estate side of things, and I know you guys know this, but I'll just say it to bring it back, is what I think people don't understand is especially a lot of people with real estate, or it's not that they don't understand it. A lot of people, I think the conversation doesn't go there. It's that the price of the real estate really, like the value of the real estate, I should say, really hasn't changed.
The dollars.
It's the value of the dollar, right? And the best example that we've used in the presentation, we used visuals. We put our parents' home that they bought for like $100,000, just below, and they bought it now, what was that, 40 something years ago, right? So it's $100,000. That home's now worth, I don't know, call it 1.3, call it 1.5 just for ease, right? So it was 100,000, it's worth 1.5 now. The home hasn't changed. We put a pool into that house. There's been some updates, some tile, some hardwood. Nothing major, no like kitchen overhaul really. No real bathroom overhaul. Some updating. So they've maintained the property, but the property really hasn't changed. So if you put the amount of money on the driveway that you needed to buy that property, it was one stack of bills was $100,000. You needed one stack to buy it. But then 40 years later, you need 15 stacks to buy it. But the property hasn't changed. But all of a sudden, we need 15 stacks of money.
The amount of dollars injected in the system has changed.
Yeah. And it's just like, in my head, and maybe it's just maybe I'm being too simplistic with this, but I'm like, once I get my head around that, I'm just like, oh my God. I get it. Like I look at everything now, and I look at everything in a different light.
Yeah.
Well, like why would you be incentivized to keep capital in a system that deflates the dollar every single day? Your dollar's worth less every single day. It's when you I guess they call it swallowing the orange pill. Like when you understand that there's no real hard money anymore. It's not real. It's not backed off anything. They took it off the gold standard back in the 70s, and they've devalued it ever since. It's a hard pill to swallow, but you also take a look at, the wealth gap that's being created because of this, because the people understand this fundamental thing.
100%.
It's, you own the assets, it inflates with time. Yeah, we actually were just shooting a podcast earlier today, and we were talking about a stat. Over 80% of the stock market is owned by 10% of households in Canada, in the States.
Oh, really? I didn't know that.
1%, the bottom 1% is like the bottom 30% of the country,
Yeah.
and the middle class owns like 10%.
Yeah.
And it just inflates and inflates and inflates, and it's going to create systemic issues in our country and across the globe moving forward. I guess like tying this back in, like, you know, when people out of necessity now or have to understand how the economics work, because back when your parents were, younger, they could buy the house with a stack, and mom could stay home, dad could go to work,
Totally.
and it worked. But out of necessity, you need to figure out how this is going to go in the next 10 years, 15 years, maybe even less, because the train isn't slowing down, it's accelerating, it's speeding up. If you're not situated properly to be able to deal with what's coming, you're going to get left behind. There's no working hard enough anymore to be able to get ahead.
Yeah. Yeah, we call it the destruction of the middle class.
Yeah.
That's, and it's sad to see it, but it's kind of what's happening. And I think your example was the best. Like, there was a time when, the average family was a single income family because you could afford things, right? And
Everything.
And then, you could live like a
Not
middle
just things like the perfect life.
100%. Yeah, you could live like the average middle class life, however you want to define that, with a single income. Like, it was kind of relatively normal, right? And then slowly that became less and less attainable. So then it was like the average income now. Like, now it's like 2 incomes is like really the norm. Because
And it's still a lot of money. They're still making like $200,000 a year and struggling.
100%. Yeah, because the cost of everything's gone up because the value, like, look, the money base, I mean, there's different, you can look at different stats, but really it looks like it's about 7%. Most of the numbers will be about 7% annually that it goes up. If you look back, I think we compared it to real estate prices, but going back to 69. So I believe where I'm pulling that from is back to 69. The Canadian M2 rate grows by about 7% a year. So if you look at that and you compare it to asset values, for example, then if you look at the stock market returns, if you're not, someone that's earning 7% in the stock market, well, you're not earning 7%. You're breaking even. Yeah. Right? And they tell you that inflation is 2%, but what they don't tell you in Canada is that they can, their equation to the formula that they can use to calculate it is they can replace things. So if steak gets too expensive, they're like, well, you don't need steak. We're not going to put steak in there. That's too expensive. We're going to put ground beef. You know what I mean? But I mean, maybe it's not even ground beef anymore. Maybe it's hot dogs. Soon it's going to be like 3D printed crap or whatever they call it. They're going to call it when it's not even real meat anymore. Like, who knows what they're going to call it, right? Maybe they call it protein powder instead. You're getting protein. It's the same thing as beef, right? So, and it's just, it alters the way people, the way society is constructed and the way society works, it alters it. And it's almost like, so this is where I'll get frustrated as well. Have I said frustrated a lot so far? Because I seem to get frustrated a lot.
No,
okay,
you're good.
Because here's where I get frustrated too.
Passionate.
Is because, well, it's people aren't talking about the impact to society that this has. So like, some people will look at real estate investors and they'll be like, oh my God, these greedy investors. Can you believe they're doing this? They're taking up all the housing stock. They're the problems. If it wasn't for these investors, everything would be okay. Like, they're the problem. I'm like, what are you talking about? Investors are being forced to do something. If they don't do this, like you're talking about, if they get destroyed, they fall. Look, if the middle class is letting Canada's left here, they're either going to go up because they own assets, or they're going to fall behind. Right? So you're being forced to become an investor because your savings will lose their value. So whether it's in real estate or other good assets, you're forced to become an investor. So how can you blame the real estate investor that's just trying to do the best thing for his family? So if I'm trying to buy a couple extra properties to rent them out because I'm trying to create some wealth or protect my savings for my kids, that's evil of me? Well, if you gave me a good financial system, I wouldn't have to do that. I don't want to do it. Why do I don't want to do it to begin with? I mean, I don't want to have to deal with the problem. Like most investors, no one wakes up and be like, man, I really want to be a landlord. You know what I mean? Like, that's
deal
like
with all those problems.
the dream of mine
Yeah.
is to be a landlord. I can't wait. Like, I want 10 different properties all over the place, and I want to follow up with tenants saying, hey, can you send me my money? And there's management stuff that comes up, and I want late at night on a Sunday afternoon when I'm sitting on the patio, someone calls me and says, oh, the toilet's leaking, you got to come here right now. Like, that's like my dream life.
Yeah.
You know what I mean? But they're being forced into it because if they don't, they're not protecting their family. So how can you blame them?
Yeah. Well, I think like the biggest, I mean, it's the people, not the people, but I mean, on the left, right? There is more of that, like, I deserve this mentality on the left. Like, I deserve this quality of life. I was born a human. I deserve to have the roof over my head. I should be able to have this quality of life. And, as much as in theory that might be, a viable thought process, it's just not how it's going to work in today's world. I mean, like, system isn't set up for you to advance appropriately, right? I mean, like, there's reasons why certain things aren't taught to you, like why it's not very easy to understand the tax code. Things like inflation, what goes into inflation. The average person doesn't know that. I mean,
Yeah.
they don't even teach financial literacy in middle school until you get into like a certain degree, and even then, it's to a certain extent, right? So I mean, it's for those who are going to be able to come out and take their own initiative and grow. Like you're going to be able to move ahead. You're going to be able to keep with the top wealth gap and not avoid the giant spread where the guys on the bottom and they're going to complain about it and expect things to happen. And that's great, but you're going to get pushed so far down to the bottom. Like it's like the wealth gap is going to be massive.
But
Yeah.
I mean, I guess the looking forward, like the question is, what happens to, the group of people who no longer want to be part of the system because the system doesn't help them anymore, though? Like my sisters, for example, they're 20 years old. What happens? Like when I grew up, I had dreams of getting a good job, buying a house, having a car, going on vacations, living life. This whole generation, the system isn't made for them. Like they can't buy a house, they can't afford anything, they can't get jobs. Like what happens to the system systemically if we keep going down this path for 5 or 10 years? Like, and you have a giant cohort of people who just, the system doesn't work for them anymore.
Yeah, I think that's what a lot of people are trying to figure out right now.
Yeah.
Because it's like all signs point towards that being the case.
Like UBI, like mass
sure.
UBI
I
rollout.
think it has to be. Like, there's still some tricks that they have left to kind of create the facade that things are okay, right? Because in other countries they have like 50-year mortgages, for example. So all of a sudden, hey, well, things are affordable all of a sudden. You don't have to pay your mortgage off after 30 years. We'll give you 50 years, but your monthly payment's only this much now. And like, I mean, you guys know in mortgages, most people don't even care the price that they're paying. They just care about how much their monthly payment is, right? When I was buying a car last time, I forget what it was, a couple years ago, I looked at like the line that I looked at, because the guy was surprised I was looking. The total cost of financing. So I was like, I want to see how much interest I'm actually paying.
Yeah.
And he's like, oh, okay, yeah. Because he had to like find it on the contract. You know what I mean? Because people don't look, they just show you the monthly payment. And I'm like,
And there's a reason it's right by the sign line too.
yeah. And it was great actually. It was like 0.99% financing. I'm like, because they're like, do you want to finance it? I'm like, what's the rate? He's like 0.99. I'm like, okay, I'll finance it. He's like, how much? I'm like, at that rate, all of it.
Yeah.
And can I get cash back? You know what I mean? But it's just like people don't look at it like that. That's not the way the world works now. So I think there's some tricks up their sleeves, or they're going to take like part ownership in the assets, right? And there's already been kind of some dabbling with that. It's never really worked, but it's like, oh, maybe there's just something else they do where it's like, hey, don't worry, you don't have to come up with a down payment. We're going to put the 20% down. We're going to own however much percentage of the property, and we'll share in the value of this, and we're going to control this and that. Like, I don't know, but there are these types of things that have been done in other places throughout time that you're like, okay, you could see that there's those types of options. UBI is one of them. The UBI thing blows me away because I still don't understand where the money comes from, right? And Floyd, Floyd Marinescu? You ever come across that guy? He runs like a UBI, like a foundation, like a kind of like like a business.
Tank?
Yeah. Yes. Thank you. Like a think tank. And he's very pro UBI. He's a smart guy. So I've had a couple conversations with him before as well. And one of his things is he's like, we should be using the resources in the country to then help Canadians, and we could then facilitate some of these types of things. And I'm like, yeah, well, good luck, because now you're putting it back on the government, and it just never seems, but it just never seems to work that way. Like there's just too, something I said to him was that my belief in what he's saying is just he's like he has much more faith in the government than I do. So maybe I'm jaded or whatever, but that's where I'm coming from.
I don't think
with
you're the
that
only
type
one
of stuff.
that feels like that. Like, I feel like everyone's a little bit jaded towards the government these days. Like, how much help have we really had over the last 10 years? Like nothing. Like the country's gotten worse and worse. We've missed out on so many opportunities. Like I think Canada almost had their own like little opportunity for industrial revolution, right? Like bring back the resources, start refining things in Canada, like take advantage of that. Like we have all of this stuff at our fingertips. Like we're not making any money off of it. Like
how old are you?
34.
34. What are your friends? Do your friends talk like you? Like,
Yeah. I think we're in a bubble though. Like,
are you? Yeah.
Yeah.
Going back to my point earlier, where men starting to take advantage and getting back to creating. Like I think when you're in the circle of people who see what we see at this point in time, they're already starting to get the head start on, right? Like the entrepreneurs, the guys who are
Got it.
putting the money into the investment, like those are the guys that I agree with you. We're still in that early cycle, but I think the people who are awake to what's going on are able to recognize it early and figure out if you don't do it now, like it's going to come so fast. And when it hits, you're not going to be expecting it. It's going to hit way bigger, I think, than
That's the
what
thing, and
you
it's
can
happening
understand.
faster and faster.
Yeah.
Right, and it seems like they're never going to let things like recessions are like a thing of the past now, because every time there seems to be this like chance of a recession, it's like, oh my god, stimulus, you know, like what they did during COVID was crazy. Like, and even if there was this initial panic that happened within 60 days, you kind of were like, okay, I kind of get a sense of what's going on. You know what I mean? And they kept rates super low. They kept all that extra stimulus in the economy for what, a couple of years? It was nuts. I was like, holy
First
cow.
test round of
So what-
UBI was.
Yeah, it really was. But
Yeah,
you saw the results. It destroyed everything.
So what happens when you continuously, you know, have compounding inflation over time, and your dollar just legitimately, you need like your Zimbabwe, like, you know, you
Just revalue.
wait,
Sorry.
is that what's going to happen? You're going to do SDR. You're going to have a some sort of stable coin backed by commodities and digital assets that people are going to use.
I think eventually people revalue against something else. And there was a line in Saifuddin Amusa's book that really always stuck with me. His book was called The Bitcoin Standard, but it wasn't really a Bitcoin book. It was more like a money book, and they kind of talked about Bitcoin a little bit at the end. And it was something like along the lines of throughout history, humans have always migrated towards the hardest form of money. And it always stuck with me. I'm like, huh, that's interesting when you look at it like that. And it's kind of like what you're seeing now, like, you know, like look at the run in gold, like we were talking about earlier, right? Like that's a serious run in gold. Gold doesn't move. What's it up 50%?
Yeah.
A little bit more. I think it's more now, right? 50% in a year. Like that's like that's like historic moves in gold, and maybe it kind of bounces around a little bit, but it's like something's going on. People are looking around, being like, okay, maybe this like they're going to keep printing. So maybe I shouldn't just store all my savings in this thing that they're just going to keep diminishing in value, and I should be doing other stuff, right? Bitcoin's still like, you know, I like Bitcoin. I'm a believer in Bitcoin. We talk to all our real estate investors about, and we have for a long time. We've been like the old, boring real estate guys. We've never got into really hypey stuff. We were always like, hey, you buy properties and, you know, do this thing called, it's crazy, it's called positive cash flow. And you buy these properties and they generate like income for you, that, you know, not like just on paper, like actual money. And it goes in the bank. But then we're like, as you can earn income from these properties, take the money and park some of that, like your savings in hard assets. At that time, we were talking about gold.
Yeah.
Right. And then 5 years ago, we started talking about Bitcoin. And so we've always been these old kind of like hard money and real estate guys. And, you know, it's just easy to see that now as the debt has amplified and the money printing has increased in speed, that more and more of that's getting pushed to those types of assets. And real estate in Canada and the GTA more recently, like, you know, people will be like, well, you know, real estate prices have come down. I'm like, yeah, because they overshot like crazy, right? They were going up, I don't know, I feel like one December, I guess it was December 22 to 23. No, it would have been, I'm getting lost. Maybe 21 to 22. I forget. 1 December to January, we came back and we're looking at like our stat sheet and we're like, is this right? Like our property prices up like $75,000 in like a month.
Yeah.
You know what I mean? Like it was
like the price, it was wild.
like it just, you knew it didn't make sense. Like it was like, this is all wrong, right? So, but that was because of this large influx. Like I feel like what started that was this large influx of stimulus, right? So it's like, oh man, this ball's really rolling, and then that started pushing up the price of everything, and then everyone gets FOMO, and then it creates that last little euphoric phase of a
Blow
bubble.
off
That,
top.
yeah, exactly.
Yeah.
And that's, I think, what happened, right? Whereas now, if you look at long-term trends, we're kind of like back in line to where if the historic rate went with the money supply, we're kind of in line with where prices would be now. Like, do they kind of undershoot a little bit? Like, you know how the pendulum swings both ways, right? Does it undershoot for a little bit and then come back? But we're right about there.
But in a situation where like there's no, like, you're seeing sovereign like bond buying fall off a cliff. Nobody wants to buy the United States debt anymore because the amount of they're paying on interest alone is accumulating so fast that the debt is no longer like viable. You know, the system as a whole, like, you know, if we're talking about where this is going to go, like, you know, there has to be some sort of, like, as you said, everybody moves back to hard assets over time. Like, I don't think it's a coincidence that Genius Act and the Clarity Act and all these things are coming out right now for the digital dollar, because at some point,
Brilliant.
well, it is
Well, and they've started
because
buying more gold as well too.
well,
Like,
they're
it's
the
not
biggest.
huge increase, but they're buying more.
So the
Yeah.
Genius Act actually requires that every
Fact.
that they hold long-term treasuries, because there's no want anymore for United States Treasury bonds. These companies are now going to become the single largest holder of treasuries and then blast the dollar out to the world.
Yeah.
It's going to be a synthetic dollar, right? So, like, I think what's going to happen. I'm tinfoil hat here. Don't. But I think.
Which is usually accurate.
I-
But yeah, that's a
yeah.
whole other conversation. Yeah.
I think what they're going to do is that they're going to digitize like commodities, and you already see it with Russia and China and all that, and it's going to be some sort of backing SDR on like these digital dollars when you start to lose the actual dollar, because the average person won't have to. It won't change for them. My dollar that I have on my credit card is
Yeah.
the same thing because it's stable coin, but at some point we're all going to migrate back to a hard asset, and those assets are going to be backed by that dollar.
Yeah. I mean, there's so much to what you said. I agree with so much of it. You're right. Like, I look at what they did with the Genius Act. My brother and I will always talk, and I'm like, I just think that because Tom's been saying, he's like, man, this is going to happen sooner than I think. And I'm like, I don't know. I think you underestimate how long they can kick the can down the road for, right? And this is just another example of that, because now through the Genius Act, I mean, there really is the potential that they're exporting the US dollar to the world. Because if you're in so many other countries in the world, do you want your local currency? Or if you have easy access to digital US dollars, you're going to take your savings, you're just going to buy these digital US dollars. And the numbers on them are huge. I used to know, I always have to go back and check, but like if you look at Tether, which is the biggest US dollar stablecoin, their reserves, the amount of USDT in circulation, it's massive. I don't know if you know the number or not.
Yeah, no, I don't know the number off the top of my head.
Yeah, but it's huge, right? So like people are like, oh, well, how much are all these little people just going to put their US dollars? No, the number when you look at it globally is enormous. So it's kicking the can down the road for the demand for the US dollar. And I think the US will continue to lead there, because even if other countries try to do it, is like there's this risk associated with the Russias and Chinas of the world. To most people, in most people's minds, they're like, well, do I really trust Russia and China, or do I trust the US more, or the US dollar? And most people have a bias towards the US dollar because we've been using it for such a long time as a global currency. And they generally, I don't know if trust is the right word, but they have more faith that the US might not freeze their assets. I don't know if that's well-placed faith or not, but it's like,
I'd rather have China. I mean,
yeah, if you have one of those choices, right? But so that's where I think that they still win that race.
Yeah.
And then you look at like how many Canadians have you talked to over the last 5 years? They're like, hey, if I could be paying you in US dollars, would you rather be paying you in US dollars or Canadian? And like everyone's like, well, I don't know. I was in Europe this summer, and after things were hitting my credit card, I feel like it was at like 1.6 something or something. Like it was and I'm like, oh my God, like I feel like, I think I know what it used to be like for Mexicans to come to Canada and travel and pay with the peso.
Yeah.
You know what I mean? Like, I'm like, this is crazy. Like, when I did the conversion, everything was basically, I looked at my wife, I'm like, we need to leave soon. Like, I think we're going to be bankrupt if we don't leave here soon. Like, this gets crazy. You know what I mean? Like, it's just like, once you do the conversion, everything gets nuts. So yeah, I think that's what ends up happening. It's really going to be interesting to see what happens.
Yeah.
Because the other part of that I think is important for investors to understand, and maybe this is tinfoil hat stuff as well, but I don't really think so based on what we've already seen in Canada. It's like, how much of your assets, or what percent of your assets do you want outside of the system, outside of a centralized, controlled system? And if what happened with the truckers in Canada and the way they froze bank accounts didn't open your eyes to that, I don't care if you agree with the truckers or not, because even if you disagreed with the truckers, it's just going to take, one time it's going to be something you agree with, and it's going to impact you. It's like this free speech thing that you see this battle going on now, and the Jimmy Kimmel thing that he was recently put off, and everyone's up and down, oh, Jimmy Kimmel's, free speech, put him back on. Oh my God, well, how many other people have been canceled over time? Like, throughout COVID, how many doctors were being canceled, even just for their opinions? How many people that, this is like a left versus right, but Jimmy Kimmel was on the left. How many right-wing commentators, Tucker Carlson, they were cheering when he was fired? You know what I mean? Like, but it's just like this double standard thing. So like, there's this centralized control, and I just, my personal opinion is I think a percent of your assets, whether it's gold or Bitcoin or something else, you might want to seriously consider having them outside of a centralized control system.
The trucker thing was huge for me. Like
Yeah.
the fact that they just, bank, like anyone that was remotely involved, oh, you donated $5, yeah, you're frozen.
It was insane.
But you have all this other extremist stuff that's going on in the world, and not even the world, in Canada, because we'll keep it to that, and nothing is getting frozen. Like it's.
No, it doesn't make any sense, And then, and some people, their argument's going to be, so to counter that, they're going to be like, well, like, what those people were doing to people in Ottawa. So like it kind of made sense. Like they were supporting people doing bad things to people in Ottawa. I'm like, okay, that's cool. Okay, if you agree with that, that's fine. However, next time it's because it's like whatever cause you believe in, that someone doesn't agree with it and you get shut down, then what happens? You know what I mean? Then they're just like, oh, well, that's different. That's like my cause is okay. And I'm like, oh my God, there's most often in these conversations, there's such a double standard that comes out.
People
like, it doesn't
burning the
work like
flag, yelling "Death America, Death!" Like, and not to get too political with it, but I mean, like, if that's not extremist enough for you to invoke some sort of like terrorist measure on freezing bank accounts, like.
No, it's crazy. Like it was wrong on so many levels because there was no, and it was even proven that it was like an abuse of power.
Yeah.
Like, but in Canada, in the courts, everything takes forever. So it finally came out. But by that time, everyone's got such a short-term memory. No one even remembers.
Didn't they just sentence the person who was responsible for it to like,
like
7 years in jail?
Sorry. Yeah. I mean, yes, that's a whole other conversation of what's something wrong with our country. Yes, I agree with you wholeheartedly. But I mean that what they did by invoking the Emergencies Act was an abuse of power.
Yeah.
But no one cares. It doesn't get reported on. No one cares. It doesn't matter anymore because, that was 2 years ago. Who cares? You know what I mean?
So much
Some of the
stuff
things
on
didn't
that
even go
time
through
period.
court because they're like, how does it matter anymore?
The slippery slope of it all is the issue. It's like if you give up an inch, you take a mile. Like if you give up that
100%.
one thing, and that's the first. And that's why I love the states. Like the First Amendment, it is what it is, and you don't break it. You can't break it. Just it is. Same with the Second Amendment, or whatever that might be. Like. People need to stand on, what it means to be free. And I think we're slowly losing ground on that. So that goes back to the money. The money isn't actually money because in the 70s they switched it from gold to nothing. And people are starting to really realize it now that it's not actually what it is. And unfortunately, that's, probably where the future is going. You take a look economically, politically. I love Canada. My grandparents came here with nothing. Like they built whatever they have today. And like, I was born here and I love my country, but like, kind of going back to needing to be informed about the world that we live in and how to navigate it. It's so much more complicated today than, and so many things are happening and you need to be up to date with those things to be able to really get ahead because the middle class was able to make it happen. But, unless you're putting the hours in, making the right decisions, knowing your economics, knowing what's happening politically around the world, like, you're not necessarily doing enough.
Yeah, you're right. Unfortunately, like we're required now to be, somewhat first investors, right? In some way, shape, or form. Like, because if you're just saving in dollars, like it's just obvious, you're just getting wiped out, right? And especially as the debt grows, it has to grow faster and faster, right? So you just get wiped out faster and faster. And I think that's why we're seeing these things happen faster, and you're seeing the impact of them feel larger. Because it's getting amplified because they have to do it at a faster rate in a larger number, so it has a greater impact. So it's not like, it's not like hidden as much. Maybe there was a time when inflation really was 2%, so it was more hidden. But like now, if the government inflation was 7%, whatever the peak is that it reached, like what was the real inflation? Like what was housing
They were saying
inflation?
it was like what 11 was more so real, wasn't it? Around
Probably
that time?
something like
11?
that. What was housing inflation over the last 5 years? Right. So if you're saving in dollars, and this is where the money thing, if we take it a step further into where how it impacts society, think of the person that's comes to Canada. Canada's always, your parents came to Canada, my parents immigrated to Canada. We've taken in a lot of immigration. There's an argument to be made that the way we did it recently has been pure garbage.
Yeah.
I think that's a valid argument. But we've always had a good immigration system. We've always been looked at from from other parts of the world as like the way that, Toronto specifically, the way that all these cultures live together is amazing. And I remember growing up, like people were like, I can't believe all these cultures live together. Everyone gets along. It's nuts, right?
The melting pot.
So yeah, right? And we've kind of destroyed that through our immigration policies. Like that hasn't really helped. But so someone's immigrated here. They're trying to save up for for a house. Okay, so they're using the Canadian dollar, they're saving up for a house. But because we're destroying the currency and pushing up asset prices, they can never elevate their standard of living, right? Because no matter how much they save, things keep getting pushed further and further out of reach. So people just look at this as like an investing thing. You know, sometimes they're just like, well, it's just like a way to make money. It's like, well, no, like if you fix the way that the money or the way that value, that people put value into the economy and how they're able to then save that value for a later date, then you're actually allowing people to elevate themselves throughout the economy. Because if someone wants to work 2 jobs or work 3 jobs and really bust their ass, they're able to get the benefit of that versus having a large portion of that benefit stripped away and maybe never ever being able to reach that goal because we keep printing so much money, debasing the currency so much and pushing asset prices out of reach. That's where the problem lies. You know what I mean? There are some things that may help. Like there's things like, you know how you were talking about tokenizing things. You can tokenize real estate, and then people might be able to buy pieces of real estate with like $500. They're one, you know, they have a part owner of whatever a building it is, or a plaza, or that type of stuff. So that all that type of stuff will you know, can help through technology.
Well,
so
even going back to your earlier comment about CMHC and like options to be able to help people getting in, right? Like you're talking about fractional shares of potential down payment, investor ownership. Like that's going to be a potential if you have tokenized assets.
Yeah. So maybe that helps, and maybe that removes it. But I mean, the policies, the path we're on to, you know, when we're talking about where does this go, with the path we're on, like it's not good.
No.
I like, it sucks to say. I don't like saying it. I love Canada. I love it. It's a beautiful place. We have so much. I'm not trashing Canada, but I'm like, it's an abused country.
If you understand the rules of the game, you're not going to be angry at the guy at the rules. Like, you know, you just play within the rules of the game.
Yeah.
And understanding the rules of the game are how you get ahead in life. And unfortunately, I think systemically, no one understands the rules of the game, or haven't had to for a long time. And where things are going, you know, you have to understand those rules.
Yeah. And now they're more impactful than ever, really.
Yeah.
I think, and I think the importance just goes up.
Yeah, and I mean, you know, how you can go about, you know, doing that. You know, you can go to events. So you guys hold annual or biannually events. You know, you can listen to podcasts. You can, you know, stay informed. All that.
There's a
kind
lot
of
of stuff out there now.
Yeah.
The flip side of that is you got to be careful.
Yeah.
The stuff you listen to too, right?
Especially getting into crypto. Like
Yeah. Oh
very
God.
volatile.
Yeah. Everyone's got the next great hot stock tip or crypto. Now it'd be crypto tip or meme coin or this or. I mean, even in the real estate world, there was a lot of things that happened, like you saw over the last few years, the things that happened in the real estate place. Like people made big promises and there was like, they weren't protected, that people didn't protect themselves. There's a lot of people, well, look, I'll just say it, like, you know, in the, on promissory notes, there's a lot of people that I spoke to that just, there was large sums of money that they lent out on promissory notes because they were made big promises and it just went poof into thin air. You know, so anytime there's a promise that's like too good to be true, just make sure you do your due diligence in anything. I don't care who's saying. If I'm saying something that sounds too good to be true, don't believe me. Go do your due diligence. It doesn't matter to me.
You should never just take one source of info and go out there and make investments on it. Do your research. Start putting together, you know, like similar theories, similar conversations. When you start to see things piling up under, you know, that's where you should start to put your, you know, your money and your value in. But yeah,
that's the downside of the access to too much information.
100%.
You know what I mean? Like there's good and bad to everything. Yeah. But the upside is now you can understand what's going on.
Yeah.
And you can play within the rules. And there's like, as much as we were talking about the systems that call it messed up and stuff like that, there's tons of opportunity within it. Like tons of opportunity.
I think people don't want to do I think it's the time thing. The time to sit down. I got to read, you know, 4 different articles. I got to verify this stuff. I don't want to do that. Like, and I think that's part of like the reason that people don't get into it is the time and effort, and it is. It's like it's not. There's no cheat code to getting. You have to research it. You have to put the time and effort in. It's not overnight.
That being said, I wish we had all the time in the world to be able to chat. We could talk for hours on this stuff. But if people want to contact you, how would they go about doing that?
Just go to rockstarinnercircle.com. They can find us videos and podcasts and anything they need there.
All the fun stuff.
Yep.
Well, Nick, absolute pleasure. I love having these conversations with people who are informed and know what you're doing. Thank you very much for coming on the podcast.
I appreciate having me, guys.
Yeah, absolutely. Yeah, it was great.